where is gold going? That's the first thing. Okay, so gold's going bullish. And then what we're doing is we take a sample section of charts, right? So we'll open up maybe the last 100 days of gold as an example. You take 100 days of gold and you say to yourself, okay, what has happened? Where are there areas of interest? So the areas of interest are large candles, right? Because that's going to get you your opportunity. It's not consolidation, it's not reversals, it's just large candles moving in a certain direction, whether it's bullish or bearish, it doesn't matter. Take a spreadsheet and mark down how many candles you see of each size, just from a simplistic standpoint. Say I saw 100 candles that were 40 pips big or 30 pips big. And then you ask yourself, okay, how many times did those candles appear and where did they appear? So then you go into your charts and you start to see, between 12 GMT and 15 GMT, I saw 80% of the time there was one candle that was 30 pips or 40 pips long. So in my head, that's an opportunity because that's an hour candle. Maybe that's a 15-minute candle you saw. Maybe that was a 5-minute candle you saw, and you've marked that down. So now you say to yourself, okay, because I know this, I'm now going to look at that specific idea. And I'm going to say, okay, between 12 GMT and 15 GMT, I see that 80% of the time there's one large candle. Now I go back and I review it and I say to myself, okay, what are the conditions before that candle appeared and what are the conditions after that candle appeared? So as an example, today we looked and we said, hey, the last maybe 8 candles on the 15-minute time frame were consolidating. So that means that we broke up, right? Because we had a bullish structure overall. So now I start to put those pieces together. How many times with a bullish structure do we see at 8 a.m. Eastern a break to the upside? And how big is that break on average? Now you go back and review all that material. And then what you do is you say, where are the problems with this idea? Weekly resistance, maybe a daily resistance, there's a news event. So now you start plugging in all those variables and you say, okay, this will only work when there's no news event, when we have bullish structure, when we've had consolidation, and I know that I can get out within 20 pips or 30 pips because I know that I don't necessarily can predict 100% how big the push is going to be, but I know that there's going to be a push at 8 a.m. If you do that as a trader and you mark down all those details and you're able to have a piece of paper in front of you or a spreadsheet or something to give you that information with any pair that you're working with, you will be successful the majority of times because you are now able to apply all these various pieces of information to the charts, which allow you then to execute with a higher probability of success at that point. Because if we know that there's going to be consolidation between 7 a.m. and 8 a.m., and more often than not, there's going to be a push at 8 a.m., you can plan around that. You can say, okay, at this point, I'm a new trader. I only want to try and get a winning trade. I don't care how big my trade is. I just want to win to prove that my strategy is somewhat successful. And after that, as soon as you keep getting wins, that's where you start to expand your knowledge and you say to yourself, okay, I've been able to get 10 pips here consistently. Is there a way for me now to get 20? How would I be able to do that? Now I'm going to dive a little bit deeper and I'm going to look at that particular area of the chart and I'm going to say, okay, where is my clean traffic? Where do I have room to move up? If we're anticipating gold moves on average maybe $10 in a day or $5 in a day or $6 in a day, where is that $6 going to come from overall? What does it look like? When I go back and I look at yesterday's chart, what did the daily candle look like before it was produced? And how did it look like when it ended? Where was the most action? And now I can start getting a little bit deeper into my plan. And now I can start having variables where I say, okay, if I miss 8 a.m., that's not a big deal because I can come back at 9:30 or I can come back at 3 o'clock in the afternoon when there's another push. I can start to manage my time accordingly. So that's what I would do if I was a new trader.
Excellent.